Maverick Traders. This is Rob Reinhold. I'm joined by Mr. Darren Fisher, and we just got through August monthly options expiration. So for Maverick Traders, we're going to close our books, and we'll be sending out profit distributions next week on Tuesday. So August is done, which means the market doesn't care what you did in August. We have a whole new month ahead of us, so let's jump into it. So this last week, we had this market that had just run up, and we actually ran all the way up to the 200-day moving average. We had 4 straight weeks in a row and about a 16 to 17% bounce in the S&P off the bottom. We hit our head on that 200-day moving average, and Monday was the last surge. Tuesday through Thursday was basically flat, and then Friday we actually had a pretty big down day, about 2%. And so we're going to take a look at the charts here. But we're seeing that there is definitely a hitting of resistance and backing off of it. Where that's going to bounce, we don't know. We're definitely in a pullback at this point. Now, this week we did hear from 2 Fed governors, and they were both pretty hawkish, and they both were calling for 75 basis points. Now, here's the problem: is the market has backed off and is now betting on a 50 basis point hike. These 2 Fed governors said, no way, we are going 75 if it's up to us. So that actually is another thing that caused the market to soften a little bit this week, is that this rosy picture of maybe the Fed's going to back off, it didn't really hold this week, and people had to really downgrade what they're looking at. Then we did get some mixed retail earnings. Home Depot was good, Target and Kohl's was bad. Overall, all of earnings has been a mixed bag. It was not terrible, but not great. The market was priced in for terrible. And that's why we got the bounce off of the earnings reports, is that people said, oh, it's not terrible. Well, that doesn't mean it's great. So let's take a look at what we got last week as far as economic reports go. When I opened up Monday and saw the Empire State Manufacturing Index down 31 points, I thought, oh my goodness, that is a terrible number. The market didn't really react to it. Remember, Monday was a big up day. And I remember thinking like, boy, the market's just ignoring this altogether. And then on Thursday, we got the Philly Fed Manufacturing Index that was supposed to be negative, and that came in positive. So we got 2 regional manufacturing numbers. These are the most leading indicators we can get, and I can't tell you what these numbers mean. One that was supposed to be 5 came out at negative 31. One that was supposed to be negative 5 came out at plus 6. I think that's where we are in the market, is that it's muddy, and the information that's coming into us isn't, it's hard to really figure out what's going on in the economy. We did get retail sales, and retail sales were, I'm going to call it flat. So we got a miss on the headline number, which was at 0. But the core number, which is retail sales minus automobiles, was actually a pretty strong number. That 0.4 is actually a really good number, which is automobiles was the issue. And then on Thursday, we got existing home sales, and this was in addition to building permits, much, much weaker than expected, down 6%. Building permits were down like 12%. Real estate was not the place to be this week, especially residential real estate. So overall, again, this is a mixed picture of the economy. And Darren, what do you think about where we are in this economic cycle here?
Honestly, I've been looking at the same numbers you are, Rob, and I got to say it's 6 to 5 and pick 'em. That's about as unscientific as you can get, but I think we're at this inflection point where the economy is trying to decide what it wants to do. You're getting a lot of headlines. Companies are preparing to lay people off. They're taking down job postings and just having somebody fill it internally, adding to their additional duties. They're not seeking out new employees. But then you see a mixed bag. The Empire State versus Philly Fed, and you're like, what am I supposed to make of it? So I think it's a coin flip. I think Q3, the numbers are really going to set the tone for what happens in Q4. I know it's a chicken way out, but that's the best call I can give you right now.
Well, I think that's where the market is no one really knows. And what was that saying that you said? 6 and 5 to 1. What was that saying?
6 to 5 and pick 'em.
And every time I think you are out of sayings, because you've said stuff, I'm like, I've never heard that before. What does that one mean?
6 to 5 odds, and pick a side.
I totally agree. I get it. Now I'm going to use
Yeah.
that all the time. All right, well, let's jump into the charts. Let's see what the charts are telling us. So this week we had a market that was down. First time in 4 weeks, so we had a down week. But look at it. S&P down 1.2. And if we closed the books on Thursday, it would have been slightly positive. Q's down 2.3%, Russell down bigger. Oil was back and forth all week long, up 3 or 4% one day, down 3 or 4% the next day. Gold sell off as well. So if we take a look, we came into this resistance area. We talked about this band of resistance in the 420 to 430 area, and that 430 is really right where the 200-day moving average is. We've been talking about overhead resistance, how we've got to get through it. And as you can see here, up till Tuesday, it looked pretty good. And then by Thursday, it looked like, oh, we're just going to base. Friday says, no, we're going to pull back. And we're going to have to regroup if there's going to be a breakout into new highs. So look, as traders, what we just need to understand is things move in waves. And I'm not a huge Elliott wave theory guy, but I love the concept of thinking about how markets move in waves. And if you take a look, moves here, down, goes sideways, just moves in waves. And as traders, you really have to think about, okay, where are we in the wave cycle? So here we made a new high, we came up, we went sideways, it came up. This is where we are right here. And so when you think about, okay, things move in waves, okay, it's on its way lower, but overall it's still an uptrend. And really could come all the way back down to this 415 area and still be perfectly fine in an uptrend. So I think that's what we're going to do, is we're going to find our way down to this 415 on the SPY, maybe 417. That is another 1% down. And I think at that point, there's going to be a reckoning of bulls and bears. Are there more buyers than sellers? And then we're going to move off of that. One thing I did want to bring up, though, we are getting into a part of the year that is weak seasonally. September is the worst month of the year. Now, it doesn't mean that it crashes every year, but there's been more crashes in September's than any other month. September is the only month that actually has a negative return over the history of looking at September. And so we have to go into this next week or two kind of with our spidey sense on and really looking at this yellow light saying, hey, do not go. Now, it's not saying to go short. It's not saying to stop. It's just saying be cautious. So I really think over the next 2 to 3 weeks, our traders, I think you've got to back off a bit. I think you've got to be making less trades. And let's just wait and see what happens. And if those seasonality patterns do kick in and we get a nasty September, great, let's go short. Let's make a ton of money like we did in the first half of this year. But I don't think you can go there yet. I think it's still too early to be aggressively short or aggressively long. Looking at the NASDAQ, same thing. We got to pull back down to probably, again, this 20-day moving average where there's going to be some support at 320. Another 0.5%, 1%. We take a look at the VIX. Big jump in the VIX this week. But, we're not at panic levels. Panic levels up here. We're just at mildly elevated from where we were. Darren, what's your call here on equities in the short term?
I think we go further than a lot of people. We go further down than a lot of people think. And we talked a little bit about this last week. The VIX getting so low that it's really setting people up for complacency. And I think that's what we saw. You got to take a look. The VIX spiked on Wednesday, but we didn't have a correspondent down move on Wednesday either. So several people got spooked, even though there was no price movement 2 days before we had a big down day on Friday. So there's some undercurrents here. And, okay, it sounds like I have a tinfoil hat on. I'm sorry if it sounds like that. But just psychologically, there are people that are spooked about this market that got spooked before everyone else did, and I think set themselves up for a good short entry for the market. That's what I'm reading here in between the VIX and the chart.
No, it's very possible. I think, we had a big run. We had a 16-70% run off the bottom. We could give back 7-8% of that and still be above 50% of the retracement. Still be just fine. So I'm with you. I'm open to the idea that this market could have a deeper pullback. I would love to say go short, but we're not there yet. I think we have to let things develop and see if September comes up and is another nasty September like it was last year. I mean, we called the same thing last year. We said, hey, traders, end of August, be cautious. And sure enough, we got 10, 15% down in the month of September, and we bottomed out in the middle of October. We could easily see that. So just be cautious. There's lots of time to trade in the markets. Sometimes there's good opportunities, and sometimes it's better just to sit in your hands and do nothing. So let's talk about this week's events. We're still in this resistance area. So we really need to get through this last swing high that we made. Once we get through that, I'm willing to be a lot more bullish. I don't think it's going to happen personally, but guess what? The market doesn't listen to me when I tell it what to do. It does its own thing. So if that does happen, then we will have to say, okay, it's going higher. Let's get on board and make some money on the long side. Again, these are the worst 6 weeks of the year coming up. September and the first 2 weeks of October. It doesn't mean it's going to crash. We have no idea. What it means is when you look at the data, 6 out of 10 years, it's not all that good and it actually loses a lot. But remember, 6 out of 10 means that 4 years it actually doesn't. And it actually is a perfectly fine month to be on the long side. I just want to keep reminding our traders, be cautious, be wary, and understand that seasonality matters. It doesn't mean it's a guarantee, it just matters on your outlook. And let's talk about Jackson Hole Symposium, because back in 2010, this was a big news event. Now, they've been holding the Jackson Hole Symposium for 30 years. It's where all the central bankers around the world go to Jackson Hole up in Wyoming, and they give some speeches and do some workshops, and no one cared about it until 2010 when Ben Bernanke used that podium to change monetary policy. And that shocked the world. Like no one was expecting it. And I remember there being a huge move. And the next year, everyone was like really worried that he was going to do it again. He didn't. And everyone gave a sigh of relief. And then in 2012, he did it again and freaked people out. So this Jackson Hole Symposium is, we have to be aware of it. We have to understand that it's there on the schedule. There could be a change in monetary policy, but look, the Fed has been pretty clear. Jerome Powell has told us what they're going to do. All the Fed governors have told us they're raising rates. I don't see there being any possibility, but we have to at least admit that it's there and on the schedule. Other than that, we just have some minor stuff like durable goods orders, more home sales. Nothing on this calendar is really going to move markets this week. So we're going to be downgrading our +3. We just went through a +3 last week. We're going to downgrade it to a +2. That 50-day moving average is starting to flatten out again. But understand, we think that this market just comes down, just comes back a little down into that 415 area. We'll take a look at things again when it gets down there and take some mildly bullish trades at that point. But from right now, we just are going to let this thing settle back and see what happens. Let's take a look at the sectors, Darren.
Yeah, some interesting movement in the sectors that we're going to see. Starting with utilities first. Utilities and energy were up. Were the only two sectors that were up. Communication services has kind of reverted to type and was the least performing sector out there as well. Everything else pretty much just down right about 1 3/4, 2%. Not really anything. Healthcare surprisingly held up pretty good as well, but it's not doing anything that we're going to see. So we've had a few downgrades right here. Take a look at utilities itself. Now I went and tried to scale out as much as I could. I think we're at. I didn't go back to a monthly chart, but I am pretty sure that this is all-time highs for utilities. So I'm at a +2 right now. You take a look at. To have a doji when the market was down, 2% on Friday, people are buying and they're not selling. That they're holding on to this. So any type of buying is supported. There's no supply out there for this, and this is where people want to be. It's a strong sector that is doing well. People want to keep pumping money into it. I mean, that's the thing you got to understand. The psychology of portfolio managers, of money managers, is they're going to keep doing the same thing until it doesn't work anymore. Utilities has been working for a good month. They're going to keep it up. So this has been definitely a strong sector. Moving on to communication services, I had gone out on a limb and last week gave communication services a +1. It's back down to the 0. I think that's about all we can expect. It's sitting right there at the 20-period moving average. It's come down a lot further than a lot of other things have. You can see it was worst performing sector. It was only up Monday and Tuesday. So as long as it stays above the 50-period moving average, I'm not going to go actively short it. But this is one of the ones that is the closest to its 50-period moving average out there. Looking at real estate, little slight downgrade on real estate. Last week it was at a +2. It's just come down. I'm going to say +1. We've got some support right there. So I think if it just bounces up and down on that support and bases for a little bit and then makes a run, I'd be more than happy to go back to a +2. But for now, just the market action on Thursday and Friday, little bit weaker than some other sectors right there. So I think we're just going to downgrade that a little bit. Industrials though are looking pretty good. Only down day was Friday. It looks like I'm still at a +2. This is kind of far away from its 20-period moving average. That's fine. It's got some strength. I think you have to be bullish industrials. Healthcare. I've been positive on healthcare for a while. Last week it was at a +2, but it's not moving anywhere. So if there's no movement, I can't really say it's a +2 environment. I'll downgrade it to a +1. I think this, just based on the market action the past couple of weeks, there's no velocity to the upside here. So I think it's just mildly bullish. Definitely not bearish. I mean, healthcare is held in there very, very nicely compared to a lot of things, but it just looks like there's not a lot of appetite to put more money behind healthcare. So just mildly downgrade. If we start to see more action to the upside, I'll be happy to put it back at a +2. Moving on to financials. This is another one held in there pretty well. Friday's candle was pretty ugly, down 2%. But otherwise, it's been looking pretty good. And the volume on Friday was lower compared to a lot of other things. So I'm still at a +2 on financials. They're holding up there pretty good. I could be proven wrong next week, and that's fine. But I think this is one that holds in there fairly well. On a consumer, last week we were at a +3. This week we're just down to a +2. It didn't, I think it's still bullish in the interim, but we're coming up into that support right there. And even if we dropped all the way down to 160, we've got plenty of support levels here. For consumer, it has been doing pretty good. We'll just see where this pullback ends for consumer, and then I'll be happy to reevaluate and start going longer on a lot of other things. Tech is pretty much the same story. It was at a +3 last week. Now we're at a +2. It's still bullish. We're just going to wait. We're a little further away from some support levels here. You could see where we get up there. But again, we're just going to pull back. Don't want to get incredibly short here. Definitely, we're above the 50 period on everything. So just wait and see where it ends, and then if we get a confirmation, go ahead and go back long. Materials held up in there. I was at a +1 last week for the first time in a while, and I'm still at a +1. It's got the 20 period is right at some support right there. I mean, this could pull back, a little bit more, and I'd still be fine with it. It's going to take a while for that 50-period moving average to start going up, to flatten out and start going up. But we did, that cross of the 20 and 50 held in that we saw last week. So mildly bullish on materials. Energy actually looks really good. Second best performing sector. I'm at a +2. I was at a +1. Energy had been in the doghouse for a good 2 months right there. I think you have to go back and say energy is now bullish again, and this is where this is a sector we want to be in. So let's look at everything graphically. Comm services is on the low side at a 0. Healthcare, materials, and real estate, mildly bullish at +1. Everything else is still, despite the day we had on Friday, everything else, industrials, tech, consumer utilities, energy, and financials are still at a +2. Last week in real estate, we were long Starwood, had the 2124 diagonal. And it was down 2.4%. You closed at about 2360. But this is a diagonal. If you, closing within 40 cents of that 24 strike, if you're still long the calls, you can take a look at rolling them into some sort of vertical spread, or if you want to just get out of it with a small gain, that'd be fine. This week we're looking at MPW, Medical Properties Trust. This is a nice little bear rally right here. Call it a low base. It rallied up, couldn't take out the swing high in early August, and then rolled right over and had a very ugly week. Now right now it's sitting right there at support. If it breaks below that, then I think you definitely got some further downside down to that probably 1525 level. Yeah, so we're taking a look at just the 15-16 bear call spread. That's going to be delta dependent, not a whole lot of theta in something that's that deep in the money. But you're giving yourself an entire expiration cycle, and I think this goes down there as well. Communication services. Last week we were looking at Snap, had an 11-12 bear call. That closed at 1160, so down 0.17%. So that's probably a break even right there. This week we're looking at MTCH, Match.com. Call it a bear rally, call it a breakdown, call it an ugly chart is really what you're looking at here. So this, this turned over, had a good day on Monday, turned over on Tuesday, and just kept going all the way down there. Got a little bit of support right there at the 60 level, but if you take a look, if there's any weakness in here, that gets broken pretty quick. So a couple of different things you can do. If you want to just do something straight and not be a hero, 60-62, bear call spread. Probably if you want to get more aggressive, go long those 65 puts and out there into September. So you're giving yourself a whole cycle, long those 65 puts, and you're gonna, if it breaks below 60, you're really gonna be in a position to ring the register. So in healthcare, last week we were long the September 16th, 16 strike calls on VERU. This one did not turn out well for the week. It was down 8.8%, but the trade was up 29% Monday and Wednesday. This week we're looking for IOVA, Iovance Therapeutics. Okay, we're going to say sideways, but slightly bearish on this one. This has been basing, hasn't really been moving with the rest of the market. So looking at that 9, 11, 13 butterfly, and we're expecting this to drop down about $1 in some time in the next month or so.
In the industrial sector, last week we had a call on Johnson Controls, JCI, to do a 5250 September and sell the August 5750 diagonal. And it actually closed right about 5730. So again, 5750 was our max gain point. And so that's about as close as you can get on a diagonal to a max gain here. Let's take a look at this week. We've got Boeing on a pullback. So look, this is a stock that bottomed out well before the market. It's had a very nice run to the upside, and we topped out, and we're now just having a little bit of a pullback. There's probably going to be some support here in the 160 area. So look, this is a pullback. We want to wait for it to pull back. We want to make sure that it's going to hold this 160, and then we want to see some sort of reversal candle, a doji, a hanging man, something there, and we want to get a green confirmation candle before we really look to do anything. Now we're going to stick with the diagonal call spreads. Diagonal call spread is a +1, maybe +2 style of trade, so it's mildly bullish. So we're not asking a lot of trades to go a lot higher. We're not there yet. We're in this moderately to mildly bullish stage. And again, we have to wait for confirmation on this Boeing before we even really take a look at it. So maybe Tuesday, Wednesday, Thursday, this might actually trigger. And I think that's going to be the time to get in. Now take a look at the trade we're looking at. 160, 165. That is pretty wimpy. That is pretty wimpy. We're looking for it to go somewhere in there. Look, if it has a bigger bounce than that, you might need to do the 165, 170s, but just a $5 spread on this Boeing. In the financials last week, we had US Bancorp, USB, and it was a 1 week butterfly. We had the 46, 50, 53, so it was a little bit unbalanced butterfly. So 50 was our max gain point, how close we could get to 50. And it was actually down just a little bit for the week, down 0.2, and it closed at 48.61. So that's a mildly positive return on just a 1 week butterfly. This week, we're looking at Futu Holdings, FUTU. This is a Chinese company in the finance sector. And you can see we had a nice long 1 month low base. And remember, during this month, the market rallied. This whole month, it had 4 weeks in a row, and this stock couldn't get out of its own way. Now that the second the market has a whiff of weakness, boom, it drops down below the low of its low. So I think what you're wanting to do here is just pretty simple. Either be directionally very aggressive, directionally short by buying those 42 puts, and then you're going to want to pull the trigger when it gets down to 35, which is about 7 or 8% lower. If you want a little bit slower trade, then the 35-40 bear call spread, and just give that out a month, and then you can just sit on it, and you can sit through all the volatility. And basically, if the market weakens during the month, this thing will be a nice max gain for you.
So consumer last week, we were long Etsy. We had a 115, 120 diagonal. Etsy closed at 107, so we didn't get the follow through that we wanted on that one. But it's a diagonal. If you want to give it a little bit more time, you've got a month. If you want to sell something against it, turn it into a horizontal spread. That's another option that you do, or you just book it and move on to something else. This week in consumer, we are looking at General Mills, symbols GIS. Nice high base right here. This is a consumer staple. Everybody has to buy cereal, and it's looking pretty good. So what you could do, go out to August 26th, and actually along the September 16, 75 call, and then go out to August 26th, that's 78 or 80, and turn it into a diagonal spread. So this has definitely got some legs to it. It doesn't move a whole lot. This is where a spread works really good. Along that 75, you've got a pretty good amount of delta right there. If you want to go short term, I'd sell the 78. If you want to go longer term, I would sell the 80 against it. This looks pretty good. It's holding up very, very nicely. Technology. Last week we had Oman Semiconductor. We had the 70-75 bull call. This has one more week. It was up slightly, so we're going to let this one run till expiration. See where we end up. So this trade's looking pretty decent right now. This week in tech, we've got Sonos. Sonos is in a low base. Okay, this is definitely not performing with the rest of the sector. At low base, and it just totally broke down on Friday. So we've got a gap down, a small base, and then even greater weakness here. So there's nobody wants to be a part of this one. So I'm probably something like this. Go out those September 18 puts. That's an aggressive play. I don't often do unhedged long calls or long puts, but this one to have that type of velocity, that type of movement, I think it definitely warrants it. Those are going to be a little bit expensive though. If you don't want to pay for the premium in the implied volatility, then I'd go out there and look at that 15-17 bear call spread.
Last week in materials, we were looking at Mosaic, a fertilizer company, and looking at the 50-55 diagonal call spread. Now, Mosaic actually had a down week, down about 2% on the week. And we had that diagonal, so it closed at 53.50. So that's right about a break even on the trade. So look, this is where we love diagonals. You get to decide, do I want to close the entire trade out? I had it for a week. It went down 2% against me. I still broke even, made a little, lost a little. Or do I still want to hold on to those longer calls and ride those out? The stock looks okay. It looks okay. It's pulling back, and I think it's worth taking a look at holding those for a little bit longer. This week in materials, we've got BHP Billiton. I just call BHP Group now, but it used to be called BHP Billiton. Looking for a sideways play. Now, we're looking this as a slightly bearish. So as you can see, whenever you put together butterfly, you're basically looking at this range and say, okay, where do we think this stock is likely to go? We've got one moving average going up, one moving average going down. And so we just really need to look at this and say, okay, well, where do we want to place our profit window? And I think right around the 52.50 to 57.50 really looks good. So again, slightly bearish. If this thing drifts down another 1 or 2% along with the market, we think this is going to be a nice little trade. I can't really call this a targeted butterfly because it's still right there in the profit window. But again, a slightly bearish butterfly on BHP. And in energy, last week we went sideways in energy with Marathon. It was a 21, 25, 29 butterfly all the way out to September. And the stock went down 1.9%. The stock closed at 24.51. So it's just perfectly right in our profit window on Marathon Oil. This week, we're basically looking to do the same. Patterson Energy. This is a stock that has not performed with the rest of the sector. So even if energy does get a little bit of a boost, we think this one's not really going to go anywhere. So the same thing, this is going to be a true butterfly, meaning we're just going to put it right on the money, right where it is. So the $15 strike is the middle strike, and we're going to buy the 12s and the 18s and make this little profit window. You can see here, it's a nice trade. It's going to go out for 4 weeks, and as long as it closes in this area, it's fine. Look, if you want to ring the register on half of the position somewhere about 2 weeks from now, that's perfectly fine. We have a lot of traders that don't hold their butterflies till expiration. They just take them down when it hits their target or their price area. If you're a Maverick trader and you want to share some trades with other traders, please go on to our forum. Go to the Maverick Trading website, log in, start talking with all the other traders. We'll put out some lists out there of other trades. Check it out. And again, we always love our traders working together to make everyone more money. So let's wrap this up. We are still firmly above the 50 SMA. So for any of you who are like thinking, oh, it's a bear market, it's finally here, you're too early. You're too early for that. The line in the sand is the 50-day moving average. As long as the market is above that, you can't be aggressively bearish. This is the rule we use. Once that happens, we'll be very happy to go bearish. But until then, you can't do it. For those of traders of ours that are bullish, let me temper that a little bit. We had a bit nice bounce. It's been well to be long. It's paid off to be bullish. We're going into a period of time where I think it's time to be cautious. Yellow light. Be cautious. Let's not be crazy. Look, just let's dial it back for 2 to 3 weeks. And when we get a little bit more clarity, then we can put it back on. There's just no reason right now, late summer, right going into September, there's no reason to get aggressively long here. So just be cautious. This week, we will be meeting live on Wednesday as usual. Joe will be taking you through the midweek roundup, and we'll be sending you out a ton of content as we always do. Thank you so much for joining us. Everyone have a great weekend. Goodbye.
Good trade, everyone.